Snapchat is down 90%. Would you buy or sell? Welcome to the Valuation Masterclass case study, where you'll learn about interesting stocks and how to value them. What's interesting about Snapchat is that its share price is 88% below its September 2021 all-time high. This is Andrew Stotz of the Valuation Masterclass. Let's get started. Remember, this information is for learning purposes only. This is not investment advice or recommendation. Let's look at the rise and fall of Snapchat's share price. During the pandemic, Snapchat's share price surged to $83 from as little as $20 beforehand. However, third quarter 2021 results were below expectations and management announced upcoming headwinds, and you can see immediately the share price fell. Then the share price fell further as analysts anticipated bad fourth quarter 2021 results. But the fourth quarter results were actually better than expected, so the share price recovered slightly. Then in first quarter of 2022, Snapchat provided insights into the current challenges it's facing. Growth is expected to slow further, and investors immediately crushed the share price. Now, the subsequent second quarter 2022 earnings confirmed the negative trend. They just came out, and we can see that the share price fell further. The stock price now trades 88% below its all-time high and below where it was before the pandemic. So, is it time to buy? Remember, Snapchat is down 90%. So, would you buy or sell based upon that information? Let me show you how to do some research like a professional analyst. Let's go to the latest quarterly update. We can go to the website of the company and we can look at quarterly results. And when we get there, we'll be able to highlight and download the press release. And the press release said, while the continued growth of our community increases the long-term opportunity for our business, our financial results for Q2 did not reflect our ambition. That's a little bit scary. Now, what you can see is daily active users increased 18% year on year to 347 million. It's a pretty good number. In fact, you can see that revenue also increased by 13% year on year to more than $1 billion US. So double-digit revenue growth doesn't sound too bad, right? Well, let me give you a master tip. To become a real valuation expert, you want to always know that it is always about the surprise component. Don't look at numbers in isolations. Always compare them with expectations. Only the unexpected part of an announcement impacts the share price. This is an important lesson that many investors fail to apply. In the case of Snapchat, investors expected much higher revenue growth than 13%. Next, let's go into the quarterly results and look at the earnings slides that they've provided. Before we do that, let's talk about how to forecast the internal drivers of revenue growth. Revenue growth is simple. It's price times quantity. Let's look at the quantity drivers of any company. It could be the number of outlets, the number of staff, the number of capacity. It could be that they're expanding to other regions, or they're entering a new line of business, or they're taking over a competitor. All of these things will expand the quantity sold. And now let's look at price-driven factors or price. You could charge a higher price. Maybe you could shift to a higher profit margin business so that the mix changes. So, can Snapchat increase revenue by increasing quantity? They look at the increase in the number of daily active users, DAU, and let's look at that for a moment. We can see that Snapchat was able to rapidly increase its users over time. This is coming from the earnings slide. But we can also see that the growth is mainly coming from the rest of the world, which we know Asia is a big part of it. So they could get some growth out of users. But let's look at the next aspect, and that is, can Snapchat increase the average revenue per user, or ARPU? Well, again, let's now look at the quarterly report and see what it says. And what it shows here is that the quarterly ARPU has been about $3.2, and that's kind of flat. You know, it had some big numbers in fourth quarter, but generally, I would say they're having difficulty monetizing. Though it makes some progress in the US, we can see that the US is generally rising. So my question to you is, Snapchat is down 90%. Would you buy or sell now? What do you think? Let me give you another master tip. To become a real valuation expert, don't be misled by seasonal effects. The revenue of most companies has a seasonal component. Now, a lot of times when we use the word seasonal, we don't mean the seasons of the year, spring, winter, spring, summer, and fall. But those are seasonal impacts. We're just saying that it could be up or down on any particular month or period. It could be the end of the year. It could be weather driven or season driven. It could be a company is driven by school or university. Let's imagine textbook sales as an example. Or holidays. What about hotels? When the holiday time comes, hotels are packed. In fact, some hotels make maybe 50, 60, 70% of their revenue in just the month of December. And it could also be an end of month or an end of quarter. All of these are seasonality, and you want to make sure you consider them to avoid being misled by a significant rise and fall, sometimes with seasonal. So now let's look at this table again, and I just want to highlight that it looks like we've got fourth quarter seasonality here, where the ARPUs tend to jump in the first quarter. So if you were to use the first quarter to forecast the fourth quarter to forecast the first quarter, you're going to get it wrong. We can see that also is in the European numbers. Why is that happening? Well, that's another deeper question we can ask later. Now, we can extract data for quantity and price from the annual report. Here we have daily active users and the ARPUs. Quantity times price equals revenue right there. So what we can see here, it's quite interesting to me, is I'm just going to grab my pen and show you that the ARPU, the revenue per user, is going up and up in the US, but in the rest of the world, it's going down and down. That's fascinating, despite the fact that the number of users in the rest of the world has gone from about 60 up to 125, so doubling. But maybe it's because of that doubling that bringing in a lot of people that aren't paying any revenue. So now we have our framework for forecasting revenue. Before we dig deeper into Snapchat, I'm on a mission to help 1 million people reduce risk in their lives, and that mission has led me to create the Become a Better Investor community. Join the community and get access to global asset allocation and stock strategies, institutional grade research that we present exclusively to members, weekly Q&A and discussion to test your ideas, complete valuation reports for companies the community chooses, and you can share ideas with other members and build your network and get heavily discounted or free access to our courses and books. Just go to becomeabetterinvestor.net/community and claim your 35% lifetime discount. You can apply the code that I have here, YT35, for a limited time only. I'll put that in the link below. Next, we want to understand the latest business developments. We can look at the investor presentation. We can download that and see. Snapchat sees a massive opportunity to expand here. We can see 25% penetration in North America, 15% in Europe, and 6% in the rest of the world. It estimates that the total addressable market to be the number of global smartphone users. That's why the penetration rate looks rather small, and there seems to be a massive amount of potential. But the relevant market is mainly just the young generation. In fact, Snapchat targets 13 to 34-year-olds. And so you could argue that for a good portion of the time that Snapchat is marketing to these people, they don't actually have the ability to control their own wallet. Now, their parents can, and that sometimes can be even better. But let's see. Now, penetration is already high for the main target group. We can see in established markets like US, UK, Australia, France, and Netherlands, they got 90% of the 13 to 24-year-old population and 75% of the 13 to 34-year-old population. So they've got pretty strong penetration rates. This means that growing quantity, meaning the number of users, is likely going to come from emerging markets, and particularly Asia. So let's look at our forecasts. We are forecasting low growth for US and Europe and higher growth for the rest of the world. Overall, the number of users could be up 37% from 2021 to 2024. That's our best case that we're looking at. Now, Snapchat is down 90%, You've got more information. Would you buy or sell? So now we forecast the price component. And we have to ask the question, how good is Snapchat in monetizing its users? Well, the average revenue per all of their users globally, in the case of Facebook, is $40. In the case of Twitter, it's $20. In the case of Snapchat, it's $14. Now, you can look at that as the glass half full or half empty. In other words, they have potential to increase to Facebook's level of 40, or this is evidence that they just can't get that ARPU up by much. Now, the US market seems to be the easiest one to monetize. Here we can get a picture of a table that they put in one of their reports. And it's the number one priority. While it has 2.5 times more daily active users than Twitter in the US, it generates less than half of revenue per user. So now let's fill in my estimates of where I think the revenue is going to go. And from that, we can ask the question, is Snapchat down, now that it's down 90%, would you buy it or would you sell it? So here now we can come to the final forecast of the revenue. And we can see that it had 45% revenue growth in 2019, 46% in 2020, 64% in 2021, but I'm forecasting 10.6% in 2022, 17.2%, and 11.2%. So I'm forecasting it's going to take a hit. It doesn't help that it looks like we're going into a recession. Now in April, Snapchat management wrote the following. That was after their first quarter 22 results. Since we issued guidance on April 21, 2022, the macroeconomic environment has deteriorated further and faster than anticipated. My gosh, it's happening fast. As a result, we believe that it is likely that we will report revenue and adjusted EBITDA below the low end of our Q2 2022 guidance range. That is a little bit scary right there. In fact, in 2022, they said this financial guidance. Given uncertainties related to operating environment, we are not providing our expectations for revenue or adjusted EBITDA for the third quarter of 2022. That, ladies and gentlemen, is a big red flag. I would say it's kind of the worst thing that you can say to the market. I mean, what the market ultimately appreciates is that you communicate even when times are down. In fact, we're not really much smarter than we were before after all that disclosure. A company always has more information than any investor, and the company did not provide any guidance on how bad the impact actually is. The only thing that we can take away from the company's statement is to reconsider our revenue drivers. But if we take a look at Snapchat fundamentals, the market correction was just a question of time. This is where it gets interesting. Here I have a gross profit margin breakdown. The first column is all companies across the world. That's 11,656 companies where I've calculated the gross profit margin of 28.7. And then you can see that I've got 595 companies that are in the communication services industry where Snapchat is. And the communication services industries tends to have a very high gross profit margin of 53.9. So to start our analysis, we need to understand these factors. Now, here's where it gets interesting. We can see that Facebook gross profit margin is champion at 81.6. Snapchat is the worst, but still not bad. It's positive and it's strong. Pinterest and Twitter perform much better than Snapchat. So you can see Snapchat at 47.6 is still higher than the average of all companies, but it's not higher than the average of all communication services companies. Now, let's look at the EBIT margin and see what we can find out. Alphabet and Facebook have their SG&A under control. Snapchat and Pinterest spend more on SG&A than the revenue that they actually generate. This is a very rare situation, and we can see that the EBIT margin, the operating profit margin, is significantly negative for Pinterest and Snapchat, and has been for a while. And then finally, there's stunning net profitability at Alphabet and Facebook. Snapchat and Pinterest are bleeding, and Twitter is slightly better than the sector average. So now we're getting some more information. We can see that if we look at the gross profit margin in terms of gross margin, Snapchat started to catch up over the past 5 years. And when it looks at operating margin, the EBIT, Snapchat is the only competitor that has not moved into profit. Now, let's go back to the website and see what they've recently released. For the first time, Snapchat has published a letter directly addressed to its investors. So what did they say? Well, they said our revenue growth has substantially slowed and we are evolving our business and strategy to adapt. We are working to accelerate growth and take share, but we believe it will take some time before we see significant improvements. That, ladies and gentlemen, is a very scary statement because, in fact, Snapchat's not really about increasing its share and revenue. It's about reducing costs. Finally, analysts have been pretty wrong with this. What we can see is analysts have been constantly downward revising, and now we're down from 23 said it was a buy back in May of 2021, and currently it's 23 that say it's a hold. And what I would say is don't believe what other people say. You've got to always do your research. But I want to end this presentation by asking you the question. Snapchat is down 90%. Would you buy or sell right now? Leave your comments below.